You guys, Bitcoin oscillates with much bigger oscillations. Mm-hmm. You may have noticed I didn't in any way taunt the Bitcoiners on my Twitter feed. You will not see it. And in fact, a lot of times I taunt the people who are taunting them, say, look, if you can't take a 30% drop in Bitcoin, you should get out of that game. Mm-hmm. Because this is going to be centered. Now, the question I like to ask you guys, and this is you Bitcoiners, not you, you're smart, but there's a bunch of loonies out there who keep saying, Dave, you don't understand Bitcoin. If you did, you'd buy it. And I go, look, I don't understand the computer I'm talking through right now either, but I can still use it. I understand Bitcoin well enough to understand the logic. I think I understand. I mean, there's things I don't understand about it, but what the hodlers, who are a very green group of investors, you got to admit that. There is a ton of people who know about Bitcoin who don't know about markets. What I worry about Tether, so my understanding of Tether is that they back the coin with treasuries. And as long as you're not trying to trade them, that you have a cash flow. I don't care if it's low or high, you have a cash flow. Mm-hmm. And so that's their profit. And they can take their cash flow and buy anything they want, right? So as long as they're backed one for one, dollar for dollar by the treasuries.
Collum acknowledges that many Bitcoiners don't see themselves as investors. They see themselves as savers fleeing currency debasement. However, he warns that a lack of market history knowledge makes this group vulnerable. When Bitcoin drops 80%, as it has done repeatedly, those without a seasoned stomach for volatility will find themselves in a fetal position. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
My assets at risk, which I subtract my house, which is an expensive house, no mortgage for the record, because I don't like that. Subtract away fixed income. That you can make money in fixed income if you're gun locked, but the rest of us you get 4%, right? And then so I would say 50%, maybe a little more of my total net worth is I call a risk asset, the kind where you could wake up, 6 months from now and find out you got your butt kicked. Mm-hmm. I made 65% on those. And then you average that in with the stuff that went basically nowhere, and you end up with about a 30-some% return.
Is that good?
You're being rhetorical here, aren't you? There was a poll I cited, and I hope you caught it by, what was the polling agency? And they asked the consumer, retail investor, what do you expect as a sustainable return going forward? And they said above inflation, 11.7%, I think was the number, right? I'm going,
why so bearish?
You guys are brain dead. You guys are brain dead. You are incomprehensibly brain dead. And so when I make 30-something% in a year, I got to figure there's either we are in a fundamental change, which you Bitcoin guys are certainly betting on, and that things really are shifting in a way. And this is not just an oscillating normal cycle, or there will be some reckoning days. There will be some tough years. So I own the big play that wasn't big in terms of percentage, but it was big in terms of me digging in, was the platinum play, which I nailed. The total return was probably about 40%. Platinum itself was more like 100, but I averaged in. I was watching it for a couple of years, and I said, when is this thing going to get off the flat line? And then the second it flickered, I started buying, and I probably bought 10 times. And the average return, which was all in the second half of the year, was around 40-something%. And that I'm optimistic about because at the current rate of production, which is deficit, the above ground platinum supplies supposedly, and I've tried to figure out if there's a way to refute this, supposedly will be gone within 2.5 years.
Wow.
If that's not If that's not a bullish setup, I don't know what is. And you get it from South Africa. I posted a Rubio quote saying, fuck South Africa, we're done with you guys. I'm going, oh boy, that's not good. So if South Africa becomes a true failed state, right? The Marxists take the means of production and discover they don't know how to produce.
Are you talking about New York or South Africa? Just kidding.
South Africa, yeah, no kidding. New York. The New York problem is interesting. So they elect a guy who's whacked out of his mind Marxist. But I think you could say with some confidence that he's probably going to do what he's told, right? He's not going to go Marxist. He's going to have powerful people saying, "Oh, by the way, dude, if you don't want to get shot in the ear, you're going to do this," right? So I worry less about what he did than the fact that the New Yorkers voted for him. That's a fundamental screw up right there. So in any event, so the platinum story, if South Africa goes souther, then the miners will get killed, but the platinum will soar, I believe. Yeah. And so the platinum story, I think, is a very good story for years, potentially.
All right. It pains me to let you do this, but take your victory lap on gold versus Bitcoin. For years now, I get to come on. I got to take my victory lap. Why do you think it doesn't matter?
Because you guys, Bitcoin oscillates with much bigger oscillations. Mm-hmm. You may have noticed I didn't in any way taunt the Bitcoiners on my Twitter feed. You will not see it. And in fact, a lot of times I taunt the people who are taunting them, say, look, if you can't take a 30% drop in Bitcoin, you should get out of that game. Mm-hmm. Because this is going to be centered. Now, the question I like to ask you guys, and this is you Bitcoiners, not you're smart, but there's a bunch of loonies out there who keep saying, Dave, you don't understand Bitcoin. If you did, you'd buy it. And I go, look, I don't understand the computer I'm talking through right now either, but I can still use it. I understand Bitcoin well enough to understand the logic. I think I understand. I mean, there's things I don't understand about it, but what the hodlers, who are a very green group of investors, you got to admit that there is a ton of people who know about Bitcoin who don't know about markets.
But Collum issues a warning. You don't want Larry Fink on your team. When the giants of centralized finance like BlackRock enter the fray, the original ethos of Bitcoin is compromised. Is it a positive for the price? Maybe. But is it a positive for the sovereign individual? History suggests otherwise.
And after it drops 80% yet again, before going up 500%, they will be in fetal position, asking for their mom and saying, I can't breathe. If you got that joke. And what they don't know is about markets and history. And so I can live with my limited knowledge of Bitcoin. What I can't, what I'm having trouble living with is my less limited knowledge of markets and history. And I've been laboring over trying to understand. So the Bitcoiners have shifted their narrative. It went from being a currency to an asset class, right? I mean, it really, you don't think about buying it. You can, but you don't think about Bitcoin as the way we're going to buy pizza. It really is more about preserving wealth, I think. But then Larry Fink and these guys show up, and they went from being libertarians, we're independent if you do, oh, Larry's on our team. And by the way, Larry Fink's on my team. I'm going to slice my throat. Because Larry Fink you don't want Larry Fink on your team. I really think that's a changing narrative that may be important, may be a positive, but it's like, he's like, right? I mean, he's on your team, but he might do it, Jeff, before you're done. So that should be disquieting. I worry about things like Tether. So is Tether audited? What I worry about Tether, so my understanding of Tether is that they back the coin with treasuries. And as long as you're not trying to trade them, that you have a cash flow. I don't care if it's low or high, you have a cash flow. Mm-hmm. And so that's their profit. And they can take their cash flow and buy anything they want, right? So as long as they're backed one for one, dollar for dollar by the treasuries. What I would worry about would be whether, and if you know the guys, they're reputable, that's one thing. But what I would be worried about with Tether in a big picture is if there's the stuff they're doing with the cash flow that's coming off if they get their ass kicked.
Mm-hmm.
And then they start dipping into the reserves.
The FTX situation. Yeah, the things that...
So if they become a fractional reserve stablecoin,
yeah,
then the shit starts hitting the fan, in my opinion.
I actually think that if you were talking to any of the guys over there, they would agree with you. They would say, hey, look, if we start dipping into customer funds, like that'd be a problem. Now, what I do find fairly interesting, and I don't know what the right percentage is. I'm not, a Basel II expert by any means or any of that stuff, but they actually have slight over collateralization of the customer funds because of some of their profits. They leave some stuff there. Now, what I perceive, they've never told me this, but I perceive Tether, what one of their biggest problems are? What do you do with all the profits? They make too much money. Like,
isn't it their money?
No, of course.
Their money.
But if let's just say you have a business and you have, I don't know, the latest numbers I think that have been public are like 150 employees and they make like $13 billion in profit.
So if you're Mark Cuban 25 years ago, you bought treasuries.
But like what?
He just said, I don't need more than $2 billion, so he just bought treasuries.
Correct, but it's just what do you do with $13 billion? And if you look at some of the announcements they've made, they invested $750 million, I think, in Rumble. They bought Northern Data. They have invested in this brain-computer interface company. Like they're making huge hundreds of millions of dollar investments.
But this is their money. That's the key.
Correct.
This is their money.
Correct.
So they're just taking revenues from treasuries and taking them and buying risk assets. My concern would be if somehow they do something nutty and then they say, well, so I know a kid who worked for a department store and he got in trouble because something happened. He had a car payment. His mother-in-law said, look, I'll cover it on Monday. And he took cash from the store to cover it. And then he would return it on Monday. And then all hell broke loose. He ended up in jail. And so
you're not allowed to do that.
You're not allowed to do that. And what happens, those people do that when they get in trouble. Mm-hmm. And but that could happen in any company, right?
Correct.
Right. So that's my other concern. I'm watching Saylor, and his share price. The client. I've asked many of you guys, you hodlers, capital H. Is he leveraged? They always say no, not much. And
and not much are two different answers. So
I know. They say not much.
Okay.
They say not much. But his share price suggests that there's something going on there because the market is knocking MSTR down much more than Bitcoin.
Finally, we look at Michael Saylor. While Bitcoin remains the core asset, MicroStrategy's stock price has shown signs of decoupling. Collum questions the true extent of the leverage involved. When a stock is being knocked down more aggressively than the underlying asset, Bitcoin, it suggests the market is pricing in a risk that the hodlers are refusing to see.